Welcome back. You're watching Market Fatafat right here on ET Now, a show where we get you all the stocks buzzing based on news flow and on technicals. Talking about technicals now, we have Ashish Kyal joining us on the show. Very good afternoon to you, Ashish. Thank you so much for joining us on ET Now. And the first stock that you're going to talk about is ACC. How is this one looking on the charts? We know that Ambuja has gone ahead with that acquisition. In a short while from now, we'll have Harsh also talk about it. But ACC on the charts, is it looking bright enough for you, for one to go ahead and make an investment right now?
Yeah, it's looking, the overall performance of the stock looks positive. If you check from the past few days, it has been bucking the trend and moving up. And even in today's session, when the broader market is under pressure, you can see that ACC is outperforming and managing to cross that around 2000 mark as well. So the overall trend for ACC is positive. Long positions can be created here, expecting a target of around 2200, and one can maintain a stop loss of 1920.
Okay, keeping an eye out on those levels for ACC. But let's move on and talk about Ambuja and Sanghi Industries. And Harsh, talk to us through the news flow that has come in here.
Well, yes, so Ambuja has finally news is out. In fact, it's broken that Ambuja will be purchasing around a 56.75% stake in Sanghi Industries. The enterprise value agreed for the acquisition of Sanghi Industries is 5,000 crores. Of course, 56.75% of that is what Ambuja will be shelling out for it. The acquisition price to current market price is 114.22, so currently at around 105.4. That's still a premium to current market price. The deal is expected to be completed in the next 3 to 4 months, so eyes on both of these counters. On the back of that, now what does Sanghi bring to the table with regard to the acquisition? Well, it has a cement capacity of 6.1 MTPA, clinker capacity of 6.6 MTPA, and more importantly owns the largest limestone reserves in India of 1 billion metric tons. We are also looking at a company which will strengthen its position in Western India. Sanghi's entire capacity is largely Gujarat based. So all of that will add to Ambuja's existing capacity. Both stocks up and buzzing. Sanghi up 5%, Ambuja up 1.5% on the back of that.
Keeping an eye out on both those names over there. Let's move on and talk about Weber Global. This one too is buzzing in trade, and this is after it reported a strong set of numbers in Q1 FY24. When you look at the numbers that have come in, we're seeing a growth of 5% on a year-on-year basis in terms of revenues, but EBITDA margin, operating performance, that's where we're seeing a stronger performance coming in. EBITDA has seen a growth of around 47%. Margins have seen an expansion as well. EBITDA margins at 9.8% versus 7% last year. Profits seeing a 50% growth as well. Profits coming in at 30 crores. What the company is also highlighting that the US and UK consumer sentiment is still muted, but gradually they're seeing an improvement coming in the US retail market. They expect reaching break-even in Germany by the second half of FY25 as well. And what they're seeing is mainly this time the repeat and retention rates were slightly lower due to the higher price points as well as the broader macro challenges that have come in. The customer retention rates are at 38%, while the digital industry is facing a bit of a temporary headwind in the US and UK, but like I mentioned before, gradual improvement is what they're seeing coming in the US retail market. As of now, the stock is holding on to gains of 3.7%.
All right, moving on, let's talk about Mahindra Financial, because this one came out with its monthly data, and if you look at for the month of July, they've said that the collection efficiency stood at around 96%, this as against 97% a year ago. Talking about the stage 2 and stage 3 assets, they've said that they continue to remain range bound when you compare it to the month of June 2023, and also they've said that they continue to maintain a comfortable liquidity chest of about 3 months' requirement. So that's the update that's coming from M&M. If you look at the collection efficiency in the month of July, tad bit lower when it's compared to a year ago, but the stock is also really under pressure. 3% downtick coming in for M&M Financial as we speak.
Okay, let's move on and talk about MapmyIndia then on the charts, and that is CE Infosystems as we know it as. And Ashish, how are we seeing MapmyIndia in terms of charts? Last 6 months managed to give almost 40% return. Now what is the upside you're expecting?
Yes, the stock has done exceptionally well over the past 6 months period, and even now if you check when the broader market is moving down, this stock is managing to form a bullish candle, which is a positive relative outperformance. And we can see it has been protecting even its 10 days average. It's not moving even below that, so the momentum is intact as of now. So I think it's a good buying opportunity for the stock to move towards the level of 1620. So the target can be 1620, and on the downside, the support of around 1480 levels should remain protected.
All right, so that's the take coming in from MapmyIndia. But let's shift focus and let's bring on board the management of Thyrocare to talk to us on the show. And we have Mr. Rahul Guha, who is the MD and CEO of Thyrocare Technologies, joining us on the show. Very good afternoon to you, Rahul. Thank you so much for joining us on ET Now. And firstly, let me talk about straightforward. Let me actually jump through the quarters and ask you about FY24. If you have any sort of a guidance that you slated for the PAT as well as margin when it comes for Thyrocare. We will talk about the quarter gone by as well in depth. How has it been?
Thanks so much for having me. The quarter has actually gone well. As I shared, our franchisee business is doing very well. We grew at 16% year on year. We had a bit of a muted performance in our partnerships business, largely because some of our key customers in the health tech space actually de-grew in this quarter. But overall, we've been quite happy to see the momentum in our franchise business. And should that continue through the end of the year, I think we should end at about 12% year-on-year growth for the financial year, and while maintaining our EBITDA margins at the similar level of quarter one. So that's kind of where we're thinking we'll land.
Okay, also I want to understand the growth, that we are expecting to see in our franchisee business. How is the contribution that you see coming in from here? What is the expectation that you have going forward?
So our franchisee business, as I've always shared the last time also, is largely tier 2 and beyond, where the competitive scenario is less, and we have been focused on expanding our network quite substantially. Almost every month we add 100 plus franchisees in our network, and that momentum has continued. And I think that execution has really resulted into the growth that you see year on year in our franchise.
Right, Rahul. Let me dwell in further and ask you about what sort of growth plans you have in terms of expansion. Have you planned any expansion plans, or also if you all have, then how are you planning to fund it?
So one is, of course, our penetration further into India, which does not require significant capital. We already have 30 labs across the country. In fact, if you drop a pin anywhere in India, there will be a Thyrocare lab within 200 kilometers. So I think on that side, it's really more about adding franchisees and so on, which is not a capital intensive process. Our partnerships business is coming along well. We will partner, of course, with the government as well to participate in many of the health tenders that have been upcoming in the next couple of quarters, and we've been bidding quite aggressively. I think most of our capital allocation for the next year is going to fund our international expansion. As I had highlighted the last time, Africa is one of the areas that we have narrowed down to pursue our Africa international strategy. Our first groundbreaking will happen in Tanzania. We should be operational in Tanzania by the end of this year. And then the second geography that we have identified for our international expansion is the Middle East. And that's something we are working on this.
Right, and also, just want to understand, you were talking about this international expansion. So how is that going to be funded as well then?
Actually, we have sufficient internal accruals. We generate a significant amount of cash every quarter. We see no reason to leverage to fund the international expansion. So we'll use our internal accruals.
All right, then Rahul, we leave it there. Thank you so much for joining us on ET Now to talk about the way forward coming in for Thyrocare, also shedding some light on where you plan to expand, or also talking about your franchisee business. That's Rahul Guha, who's the MD and CEO of Thyrocare Technologies. But let's move on and let's actually address Sun Pharma, because the numbers are flashing on the bottom of your screen. If you look at the PAT, it's coming at around 2,022 crore rupees as against the poll of 2,240 crore rupees, and that's the Sun Pharma stock for you, trying to hold on to gains as of now, but is substantially off the day's highest point. So that's a consolidated PAT number that we have. If you look against the year-on-year figure, it's pretty much flat, Winnie. If you look at the revenue, It's coming at around 11,941 crore rupees as against 10,762 crore rupees that the company reported a year ago. They've also reported an exceptional loss of about 322 crore rupees. Do you have any other numbers, Vinny, with regards to Sun Pharma? Because it's a major company. If you look at the margins, it's coming higher when you compare it to last year.
Absolutely. As of now, these are the numbers coming in, but seems like, revenue, like you can see on the screens, is revenue is above, marginally above, EBITDA above, but that profit, that's a miss coming in. That is obviously that adjusted profit is a miss because of this exceptional loss that we have seen coming in this time around. But all in all, seems like slightly above expectations, and these are the only numbers we have. We'll wait in for more numbers. I believe there's always a press release or something that will come out that will give us more details in terms of Sun Pharma as of now, Cheryl. But
one thing very key to note is the fact, Vinny, if you look at the net profit, if you adjust it for the exceptional items, the net profit is actually marginally above the estimate. So that is something to note out for. The company has reported an exceptional loss of around 300 odd crore rupees. But for now, what we are gathering is the fact that the revenue is above estimates, EBITDA is above estimates, and adjusted net profit would be also slightly above estimates. So that's Sun Pharma numbers for you. However, the stock now is actually recovering from the initial dip after the numbers.
Absolutely, keeping an eye out on Sun Pharma, but let's move on and get moving with all the other stocks that are buzzing in trade. And Nykaa is a stock that you've picked out for us, Vamakshi. Why is this one in focus today?
Well, Vinny, this stock is in focus not on the back of earnings, but on the back of a development that has happened in the company. We have seen nearly 6 executives, including the head of marketing of Nykaa, resigned since April. Key departures have come as competition intensifies in the fast-growing sector that Nykaa operates in. The exit include that of Chief Marketing Officer Shalini Raghavan, and in fact, Nykaa's founder and CEO Falguni Nayyar is now stepping up to take the direct oversight of that particular function given its criticality. Nykaa has gone ahead and said that the leadership roles are being augmented with an eye on strategic realignment, cost rationalization as well as growing complexity of the business. They did not say why the executives had left. So all in all, on the back of the executives, nearly 6 executives leaving the company since the month of April, we have Nykaa reeling under pressure today. As of now, the stock is down nearly 2.5%.
All right, that's Nykaa for you, but let's move on. And Harsh, Delta Corp, why is this one in focus?
Well, was always going to be in focus, Cheryl, today on the back of that GST meet and the conclusion of that, and the key takeaways of that. Well, the GST Council reaffirmed the levy of 28% GST, especially at entry level for online gaming. They're hopeful of implementation of this GST from 1st of October 2023, and that will impact pretty much all companies, including Delta. And you can see the stock is down 5% on the back of that. Well, also what the GST Council kind of reaffirmed is the fact that they're going to review this particular 28% levy 6 months from now. So they're going to wait for the next 6 months, try and figure out what the impact is on the business, on the market, and try and review that. So maybe some amount of hope there. But at least at the moment, it seems that they've reaffirmed that 28% GST. And the 28% GST is on full value, full face value, and not on each bet placed. So that is possibly another positive, but really that's again a reaffirmation in itself. Nothing new coming off it. And of course, have to wait and watch if in 6 months from now, they're planning to review that.
Okay, keeping an eye out on Delta Corp, but let's move on and talk about Zydus Life then. And Ashish, on the charts, how is Zydus Life looking like? What are the technicals now indicating? Last 6 months, we've seen 47% return. Are you still expecting an upside?
Yes, indeed, because if you look at the entire pharma space, the entire space has been buzzing around, and Zydus Life has shown a very good momentum on the upside. It looks like to be in the third wave, which is usually the strongest and very fast move. And we can expect a target of around 700 over short term, and possibly I think that is going to be also crossed. We can even expect further higher levels of around 750 levels, and so one can create long positions at current levels, and on the downside maintain a stop loss of around 611.
Okay, keeping an eye out on Zydus Life and those levels over there. Let's move on, talk about another earnings candidate. We have Indostar Capital that is in focus. Weak set of numbers that was reported by the company. When you look at the NII, that's seen a decline of 12% coming in and has only come in at 90 crores versus 102 crores last year. Overall, the total income is down by 7% as well. Profits of the company down by 31%. Profits came in at just 31 crores versus 45 crores last year. While in terms of the impairment reversal, that's come in at 12.8 crores for this quarter as well. So let's keep an eye out on Indostar Capital today, down and out in trade. It's locked in lower circuit. That's 5% down tick there.
That's Indostar for you. Taking a note of the markets very quickly. If you see Nifty on an intraday basis, it did slip below that 19,300 mark right now. It is just tad above the 19,300. It's at 9,310. We've given up almost 230 points from the day's highest point. But let's talk about HPCL then, and that one also is under pressure on a quarter-on-quarter basis. If you look at the numbers, there are a good set of numbers coming in for HPCL. If you look at the revenue, it was higher by about 4% on a QOQ basis. You had a PAT that was higher by 93%. Also, the margins also substantially higher on a quarter-on-quarter basis. But there's a note that's coming from Jefferies where they're maintaining their underperformed stance on HPCL. No doubt they've gone ahead and hiked the target price for HPCL. The target price is now at around 225 rupees per share from 205 rupees per share. They're saying Q1 was strong, but they're saying that the best is behind for HPCL, and that's one of the reasons why you're seeing that pressure on the counter. They're saying that the earnings have peaked with a narrow discount on Russian crude offsetting recent strength in the refining margins, and rising crude oil prices also hurting the marketing. They're also saying the preferential allotment to government could lead to further capital allocation concerns. So yes, you have Jefferies flagging off some concerns, maintaining an underperformed stance, and stock is exactly reacting to that. 2.5% downtick coming in for HPCL despite strong set of numbers in the quarter gone by.
Let's move on and talk about Zee Entertainment on the technicals. And Ashish, when you look at it in the last 6 months, seems like the stock has surely picked up some bit of a pace in the last 1 month specifically. Last 6 months is almost just a 4 to 5% return, but last 1 month, 27%. Is this an indication of some sort of momentum that Zee has picked up on the technical levels, and should we expect that to continue?
Yes, if you look at past 1 month, ZIL has been forming a very clear higher high and higher low pattern, which is as per Dow theory. The trend is reversed on the upside, and this is seen after a long time of downward trajectory that we have seen in this stock. And it also formed a double bottom around 175 from where it bounced back, broke above the neckline at around 220. And the target for this stock comes to around 270 on the upside. So there is still room on the upside for ZIL. It can move towards the level of 270. And but maintain a strict stop loss of around 210.
All right, so that's the take coming in on Zee Entertainment. Vamakshi, coming to you, L&T Finance. Why is this particular stock in focus today?
Well, Cheryl, reports were indicating that two affiliates of Bain Capital are selling nearly 7.9 crore shares on nearly 3.2% stake in L&T Finance Holdings in a block trade. The floor price, according to the reports, has been set at 128.1 rupees per share, which is 1.4% discount to the stock's last closing price. And in fact, Citigroup is sole book runner on the deal, is what the reports have highlighted. So largely on the back of this news flow, we do have L&T Finance Holdings in focus today. As of now, the stock is trading near the day's lowest point, down nearly 4% as we speak.
Let's move on, and at stock number 30 today we're going to talk about IRCTC. Ashish, how is IRCTC looking like on the charts? It's managed to give mild returns across the years. Nothing very bumper and sort of an up move there. What is it that you're getting in terms of IRCTC? Should we expect a sharp up move?
See, IRCTC is forming a very classic inverted head and shoulder pattern, which is like a bottoming pattern, and it's being under formation right now with the right shoulder nearly completing. And if there is a breakout above that 670 mark, we can see a very strong rise in this stock towards the pattern target of around 750. And on the downside, 610 is a very important support. So the risk reward looks very promising. And I think the stock is poised to be moving higher from here on, given that the pattern, technically the pattern looks very strong.
All right, that is IRCTC. But Harsh, KSB Limited, why is this one in the spotlight?
Largely on the back of results, Cheryl, and good solid set of numbers. In fact, the stock is up and buzzing, up 17%, almost now 18+% as we speak, hitting its all-time high as well on an intraday basis. The revenue is up 32% on a year-on-year basis. Very strong numbers. 591 crore is where the revenue number has come in at. EBITDA also going up by nearly 40% year-on-year. So you're seeing quite a bit of margin expansion also coming through. 83 bips on an already very healthy margin number of 13.6%. So you're seeing margins of roughly 14.5 odd percent. When I'm looking at it on a year-on-year basis, that's a healthy margin increase. And profit after tax also going up 33% year over year from that 47 crore mark to the 63 crore mark. Definitely a positive, headed in the right direction, and the stock is up and buzzing.
Let's move on and talk about IDBI Bank. That one is trading at a 52-week high today, Ashish. And you know, in the last 6 months, moved up from those 40 levels to 63 currently. How are the charts looking like now for IDBI Bank?
See, if you look at these kind of stocks, and IDBI has managed to show a very strong breakout from around 60 levels. There are big movement that we can clearly see in the PSB banking space, and over here we can see after a consolidation, a good consolidation that happened around 58, 59, which was looking like an accumulation. We are now seeing again the stock is ready to buzz on the upside and trend on the upside. So long positions can be created at current level. It's a good entry level that I am finding on the chart. And on the downside, one can maintain a stop loss of 59 for the target of 75.
Okay, keeping an eye out on those levels for IDBI Bank. Let's move on, talk about Dixon Tech as well as Pharma SGS. Now, these are these EMS companies which are in focus. And why is that so? Now, what came in as that the government has restricted import of laptops, tablets as well as personal computers. Now, why is this so? Because obviously the PLI that has come in on IT hardware, which is to support domestic manufacturing, and this is furthermore a decision in that front, so that you know more of these players actually get more manufacturing opportunities, and that is the main reason for this, and that is why we saw Dixon Tech is trading with gains of almost 6% as of now. Pharma SGS trading with gains of 1.5% as well, and this is going to be with immediate effect. So obviously this notification will be surely supporting Dixon Tech in terms of they already manufacture laptops for Acer. Other than that, even Pharma has a small portion that they're manufacturing in terms of laptops as well. Very small portion as of now, but the share in the market and the growth opportunity becomes big for them, given that there will be PLI schemes that will be supporting them in terms of growth once they apply for that as well. So on the back of that opportunity that we'll be seeing coming in, we're seeing both these stocks buzzing in trade.
All right, moving on. Ashish, let's talk about MOIL. Yes, we're seeing some sort of traction in the metal space, but do you think that even MOIL will also get that traction?
It looks like there is some selling pressure that we saw from the higher end today, but I think it's because of the selling that we are seeing across the space. The overall chart pattern looks positive. The volumes are substantially high. If you look at compared to 20 days past average volume, it is substantially high. It was yesterday also, it was buzzing with huge volumes, and today as well. So I think something major is happening around these levels. Looks like an accumulation to me, and we can expect the stock to move towards the level of 205 over short term, with 185 as a stop loss.
We're keeping an eye out on those levels for MOIL. But let's move on and talk about Zomato, Harsh, and what are we expecting in terms of numbers from Zomato this time?
Well, yes, so, you know, Zomato will also be in focus largely on the back of earnings. And, you know, let me try and break down what the possible numbers are. You are expecting the revenue to come in at around the 2,288 crore mark versus the 2,056 crore mark. It's expected up sequentially around 11% thereabouts. You're expecting a loss of around 152 crore versus a loss of 187 crore in Q4. And EBITDA loss is expected to shrink, and that is of course a positive, headed in the right direction. You're expecting EBITDA loss of you know, roughly 180 crore versus the 225 crore loss number you know, same time last quarter. Of course, the Blinkit adjusted EBITDA loss will also be in focus, 190 crore odd. You're expecting order frequency to improve sequentially, expecting Blinkit to continue to deliver a strong growth trajectory. You're also expecting food delivery GOV to grow by around 9% sequentially. IPL hopefully has aided some of those numbers as well, and of course Zomato Gold will support the numbers as well. Among the factors to watch, you're expecting a focus on profitability across food delivery as well as quick commerce. That will be key. Some amount of comments on that. Also recoveries in food ordering, whether that has really happened or not, and of course an update on Blinkit. All of those will be in focus on the back of Zomato's results.
Right, so watch out for Zomato numbers, most likely post-market hours. But on that note, we are totally out of time on this edition of Market Fatafat. Thank you so much, Kunal, as well as Ashish and Vamakshi and Harsh for joining us on the show. It was a goodbye from Vinny, myself, and the team that put the show together. Stay tuned. Closing trades coming up next.